a lot for joining me as at the close, very close to the close in fact, as at Thursday afternoon. We still have approximately 10 minutes or so, maybe 15 minutes left in today's session. I do think, however, we have seen what we have been alluding to as of yesterday and also in the bigger process of the gap fill, which, as at yesterday did overshoot that open support. The good news is that we have obviously closed those open windows, and during today's session collectively across the board, we have seen exactly what we have been speaking about. Bears out there, consider this the biggest warning that I'm going to give you. For the bulls out there, this is also, the biggest individual candlestick, or at least exactly what we wanted in terms of a one session, or at least technically anyway, two session multi-day reversal candlestick. If you have a look at this candle again, we have about 10 to 15 minutes left on today's actual composition. On the S&P 500, we are closing up roughly 0.8%. What makes this even more important is that, as you can see, we tried to push on down below the low, or the intra-session low of yesterday's candlestick. We failed. We created that of a lower wick during today's session, and as such, and as we spoke about yesterday, what we have essentially created is that of a pseudo type of tweezer bottom, if not that of a bullish counter attack. It is a piercing pattern just here. We have closed, or we are about to close, at least halfway into the previous dark days Morobozu-like candlestick, and this is occurring exactly off from that critical support area. Yes, it has overshot it marginally, but it is showing up right at that next logical area of higher support, i.e. that next subsequent higher low. This is everything when it comes to hints of the market itself finalizing, or at least concluding, that of the sell-off, very similar to the candlestick that we saw over here very early on in the period of August. It is now set up, or it is in the steps anyway of setting up during today's session. And as such, you could say with a high degree of confidence, I know, some people out there may not take this or may not actually believe what I'm saying right now, but to a high degree of certainty and probability, the markets themselves, not only on the S&P 500, but also applicable, to the industrial average and the NASDAQ, the markets themselves, there is a very high probability and also an expectation that we are not going to see them push below the intra-session low that we have just printed as at today. This is most likely going to be that final pullback, the final pullback whereby hopefully we're not going to see the bullish gaps out of this support area. And what we should establish is the market itself over a prolonged period of time. It's not going to be as aggressive as what we saw during the transition of August into September, as the markets went on their little bullish tear for about 3/4 of a month. It shouldn't happen as quickly as that. But what we should see over time, now that it appears as though we have bottomed out and we've also blown out through the bottom and put in that intra-session, reversal, we should see this market, base off this candlestick. We'll obviously follow this tomorrow. The jobs report is coming out. It is going to be released tomorrow, as at Friday. But there's a very good and a very high probability and expectation that this is it. This is done. It's over. As of today's session, I'm giving you the warning here right now. The process, it's taken place, it's played out, we've seen the reversal, and now as such, we're expecting the market to essentially base and begin, to rally to the upside. This coming Saturday, in 2 days' time, it's going to be an action-packed, Pivot Point Pro class. The reason for that is because essentially we are going to bring down triggers to set up for this impending, bullish move to take out the swing high over here in September, but also going back to July. Very high probability that this is it. This is the beginning of it. This is the beginning as of this candlestick just here. But obviously, we're going to pay very close attention to this. A very strong reversal, an intra-session reversal taking place today on the S&P 500. If I flick on over and show you this on the oscillators as well, surprise, surprise, they are beginning to turn out. Yesterday, I pointed out that the RSI very short term had pushed into oversold territory. Now that is recalibrated out of it, you can see the fast line beginning to turn up on the stochastics. Not the biggest sort of reaction in the MACD. This is going to be the most lagging of the three oscillators. But as it stands here, even considering and taking into consideration anyway, the pullback back into the 100 and the 200, we've been speaking about the area of confluence, The area of confluence when it comes to support and also gap theory, So we've got the traditional support areas and also, obviously reverse depending on which side that you are interacting with them on or from. We also have, again, those simple moving averages and the gap fill, which is giving us that general area, these green rectangular boxes, as to where we should see the market slow and then reverse off from. We are right in the midst of that general vicinity, that general location on the chart. And here I am, I'm giving you the analysis around it. You can do what you want with it. But again, don't be surprised. I know it might be a little bit hard to believe at the moment, a little bit of a stretch of the imagination to some degree, to expect, or at least to sort of forecast anyway, these markets moving higher. I'm telling you right now, even if I go through the steps of just doing a current session update, I mean, it's getting closer to the close right now, right? The NASDAQ itself was up almost 1%, or I believe just over 1%. So again, we're making back a lot of those losses that were made during that of Wednesday's session, pretty much the day after. All right, and you can see it's up even more as I refresh my chart here. This right here, let me ask you the question. What is this candle, if you can identify it for me? I'll just count it down. 3, 2, 1. This is what we call a hammer. Okay, a hammer candlestick. It's a bullish reversal. We've got that long lower wick once again. The markets themselves, they tried to continue off from, or continuing on from, that of the Tuesday, Wednesday sell-off. They couldn't do it. We've seen the intra-session reversal. Long lower wick, right, above that of the support area that we've developed throughout the entirety of August. Again, setting up on an intermediate time frame, that next higher low, which is then going to set the foundation, the support for this market over time to increase, to rise, to appreciate to new all-time highs. All right, it's really that simple at this particular point. I know it's easy to be bearish. All right, everyone seems to be bearish. Everyone's really concerned. I'm reading all of these articles about, double tops on the markets and even macro reversal patterns. It's just simply unsure at this particular point. Anyone who's well-versed in technical analysis will tell you so. This is not the top. In fact, we're probably nowhere near the top, as crazy as that sounds. All right, and this is just that next basing area upon which the markets are going to push off from. So again, this coming Saturday, 2 days' time, we are going to have a plethora of bullish trades at our disposal in our top 12 individual trade list. And right now, if you haven't pulled the pieces together, so to speak, now's the critical time, in my opinion, again, to be buying this market at a discount, accumulating or continuing to accumulate positions at pretty strategic areas of support upon which where the market is going to rise off from. All right, so I'm giving you the warning here. It's right off the rising 200-day simple moving average. Again, the discussion of confluence, support confluence, is very applicable to the Dow Jones Industrial Average here. You're getting the turn up in the Stokes. The RSI is recalibrating out of short-term oversold territory. Again, in and of itself, these oscillators, you don't trade using them, but you use them in conjunction with other pieces of analysis to lay the foundation for trade setups. And these are marginally, right, turning bullish. They're in the early instance or process of doing so. And you can front run a lot of individual trades. So these triggers are going to be brought down right after the close on Friday when we speak through this on Saturday. There's a tremendous amount of opportunity for people who have the courage and the conviction to change the trade direction, or at least understand that this has got really no legs to it, okay? And who are willing at least to step up and place a couple of macro, right, trade continuation orders in the direction of the prevailing trend, counter, of course, to public sentiment at the moment. Okay, so big reversal signals also setting up on the Dow Jones Industrial Average. When I go on over into the NASDAQ, this is not most likely, this is the strongest of the reversal candlesticks of the three markets. Okay, again, not the closing print, but very close to it, up 87 points. You've got that false break to the downside, right? We've not only closed halfway into it, all right? We don't have that of a hammer candlestick. This is pretty much a tweezer bottom / a complete engulfing candlestick, even though we do have this lower wick. It's a blending of the two. In essence, it's a very strong 2-day reversal signal. We're already pushing up to close this open window. This is following right after the meltdown yesterday. Very quick reversal. We spoke about this yesterday and what to be prepared for. And again, you're seeing it play out at the moment. So again, it's quite easy sometimes to unfortunately fall into the bearish camp, and the markets themselves appear to be dropping, which they were. But it's another thing to understand why they are. And what I'm trying to do each and every day when I sit down and bring you this analysis is explain to you, of course, forward-looking, that the markets themselves have processes. They have sort of hoops that they need to jump through prior to allowing, right, a bullish move to really succeed. And if there's anything you can take away from this video, is that we've jumped through those hoops. Okay, we jumped through them essentially on Tuesday, if not the week prior, at least on the NASDAQ. Okay, when we closed this open window up here. But now that we've overshot it, now we're starting to see the natural reaction from the institutional, the smart money, who are jumping in to actually buy this market at a discount. I want you to be one of those people. I want you to sort of bring in that additional capital if you're trading options, right? Really nice returns if you're willing to do it and execute it. I know it's hard to do. But again, trading's not meant to be easy. But these are the signals right here that are telling, they're screaming at you. For anyone who's willing to actually look without an emotional bias, the market itself is poised to run. Okay, we're turning up again on the oscillators. Again, we're lagging on the MACD. That's fine. Doesn't bother me whatsoever. The ADX has been high. So again, this sort of alludes that we may get stuck here a little bit, which works into our sort of prognosis that the market itself, it may be more of a sort of less of an aggressive incline out of this support area, but certainly more of a legitimate and prolonged rally, which is exactly what we want to see. So we're not looking for an exceptionally strong and aggressive move full of gaps. We're looking to see this slowly build momentum over time until the majority, unfortunately, wake up to just simply what's going on. So again, just to remind you, this Saturday, now that the markets have pulled back, we've got a plethora of trade opportunities. Okay, we'll obviously monitor how Friday session moves. We do have, of course, the unemployment rate. We're going to see, obviously, the initial and continuing claims, which are one of the sort of the metrics that we use, and it also is sort of combined into other components of other sort of leading economic indicators. Again, they are still holding up very nice. We're seeing the spread on the 2-year and the Fed funds rate again blow out a little bit, which is what we've been speaking about. I still think it can go all the way out to 30 basis points, the spread itself, before it collapses back into inversion. But all of this is coming together quite nicely. And again, I'm sitting here quite content, pretty calm, in fact. Again, still expecting this market for at least another year, if not maybe potentially two at absolute most, to continue on its trend when it chooses to do so, and ultimately to break out of this sort of sideways range-bound state that we've been stuck in for really since the beginning of 2018. When this happens, obviously we're going to follow along with the ADX and the CCI when it shores up closer to this macro resistance area. Now that we've gone through this process, again, it just adds fuel to the fire if we can get back on up to 8,100, right, to begin with. These are the indicators that we're going to be bringing together, mixed with chart patterns and, of course, candlestick recognition, right, prior to the move. So again, it's a fantastic opportunity to accumulate. Sorry if I'm offending anyone by speaking about the market in bullish terms. It's just the only way, essentially, to be speaking about it. Again, looking at this as a broader and deeper, sort of larger discount. And I understand not everyone's going to do it. I really genuinely understand that. But unfortunately, at this particular time, you're just early on the macro reversal. Don't think for a moment that I'm blinded by it. I'm really not. But I'm just saying that, in my opinion, you're still probably 12 months at a minimum too early, all right, in actually timing the reversal. Okay, so on that note, everyone, that's going to do us for these public, right, updates during the week. The next time I will speak with you for the pro students on the Saturday, all right? I won't be releasing a video as at Friday, okay? It's going to tie over and move into the adjustments, the amendments, the alterations that are going to be made to trade triggers come this Saturday's class, all right? So on that note, I'm going to say farewell. Hope this has helped you. But again, markets operating largely as expected. Yes, they are volatile. Yes, they have overshot marginally critical areas that we've been looking at. But as a whole, in its entirety, all right, this candlestick that we saw today is at the close, or now anyway, the close on Thursday, is brilliant. Absolutely brilliant. So on that note, everyone, I'm going to say farewell. Enjoy your Thursday evening, and I will see you all in that Saturday analysis class. All the best. It's James signing off on behalf of Pivot Point Trading. Farewell.